Shuaib, thank you so much for joining us. It's great to have you on the program. Let's just start off by looking at the overall market performance. And as I mentioned, quite a few analysts and investors out there saying it's pretty much a dull market. We're not seeing enough volume coming through, but there is a strong expectation that we might just see foreigners starting to participate in the market. Is this your view as well?
Thank you for having me, Eleni. You're absolutely correct. I think the market has been pretty soft over the course of the last 3-4 months. And there's not a lot of positive activities and huge volumes in the equity market. And it's for a number of reasons, really. One is that the fixed income market has been doing fairly well relative to where it was around 18 months ago. So we're seeing yields from the 3 to 20-year curve around between 13 to 15%. So those are pretty decent rates. Looking at that from a historical perspective. Also, we're seeing that the banking sector, the expectation is that there's still quite a number of banks are still taking quite a bit of provisions, which is adversely affecting the performance of the market. So there's still quite a bit of investor apathy for equities, and we expect that to continue in the immediate term.
Skye Bank, we saw numbers coming through, pre-tax profit falling by 45.5%, and you're talking about a lot of these banks taking provision losses. This seems to be a legacy issue that we saw coming through last year. There's a lot of optimism, though, Shuaib, that we might actually see a very different scenario playing out in 2012, and it is said that the first bank results that will be released will be very telling about some of those trends.
You're correct, because we expect that all the banks should take the hit based on their 31st December 2011 position. So, for example, Skye Bank made an additional provision of over 23 billion when they released their results yesterday. I think the expectation was much higher than where market expected, because as at their 9-month positions, the reference they gave the market was around about 2.3 billion. So we saw a 900% hike in the loan loss provision. Obviously, that's a negative impact on the market, and we saw profit after tax drop to around 5.2 billion, which was also a 50% decline. So the expectation is that for the rest of at least this quarter and into April, the remaining results that we're expecting should also have some additional provisioning from some of these banks. But I think that we're reaching the end point, and I think that the market should start to turn around sometime in the 3rd quarter of the year.
Shuaib, also, I mean, looking at UBA, Fidelity Bank, you alluded to that a little earlier. Results also set to be released later on this week, and this is just really going to build on the momentum as to whether people should be getting optimistic in the banking sector or not.
I agree. I think UBA came up with a profit warning. We have to wait and see to see whether the loss they make is actually larger than what the market is expecting. But the market is expecting them to take a pretty big hit. So we have to wait and see how that plays out. Fidelity Bank also, their top line was up 25%, so that it was fairly decent to 70 billion. Their bottom line was down as well by 11% to round about over 5 billion. But again, we're seeing the challenges continue, where it's based on loan loss provisions and high interest expense. And I think quite a number of banks are facing those challenges. But our view is that the second half of the year should augur well and much better for the banks.